Hey everybody, welcome back. We have a treat for you today. We are going to be talking about all things related to mortgage lending. We have Allison Morrow here with All American Mortgage, who will be talking through the details and specifics that go into lending. I'm Zach Vines with the Vines Realty Group, your local real estate expert, and the purpose of this channel is to be your #1 resource for all things Abilene and the local real estate market. Like this video, subscribe to our channel, and to get connected to me and my team, there's a link in the description below to a form, or simply text me the word Abilene and I will reach right back out to you. As I mentioned, we have Allison Morrow here, and to start off, how about you mention to us a little bit about how long you've been in the business, what it is you love about lending and the mortgage industry.
Sure. So I've been in the business since 2007. I started off as a loan assistant, then I moved into processing, then to underwriting, and then in 2017 I took the national test and the state test to get my loan officer's license. So, and you know, it's kind of the only business I know. I enjoy it. That kind of to the end, you're helping people with the biggest purchase of their life and seeing the excitement and just getting to the end. That is the biggest joy that comes with this job.
Absolutely. That's awesome. So to start this thing off, if someone wakes up and says, hey, I think buying a home sounds really awesome, I have no idea where to start, where do you think you would point them to related to the financing aspect of it?
So in my opinion, the most important part is your credit score. So I would start there. I would, you have all the apps, Credit Karma or credit card apps, banking apps, whatever it is, it monitors your score for you. So take a look at that and then really get in contact with a lender. If you don't know a lender first, you get in contact with a realtor, they're going to point you in the right direction. So you talk with a lender and you kind of go through like, hey, we're going to say, tell me about your credit. What's your score? We're going to know by what you say that number, kind of what questions to ask. If it's on the lower side, we're going to be like, hey, is it recent stuff? Is it older stuff? So we kind of know how to handle anything that may come up. Other than that, it's saving for down payment. There are several payment or programs out there that have different payment amounts. So it's kind of just making sure you have some money saved, and then we can get into the bulk of details of programs and that kind of thing.
Absolutely. Yeah. Okay, so we've talked a lot about before we get into the process of, we found a home, now you're working on the financing side of it. Buyers, of course, don't think about all the ramifications and maybe some things that if they choose to do something, it could affect things. So what are maybe some of the most common mistakes that buyers made once they lock in a home, you start working on the loan, and they did this, and that kind of had everything explode?
Right. So the most common I see is they think they need to pay off all their debt. Go ahead and pay off everything, and then they start closing accounts. Don't do that. Once we pull a credit report, that's how the file submitted to underwriting. Credit profile should remain the same. Now, if we ask you to pay something off, that's different. So it's kind of one of those things, leave your credit alone. Don't pay off stuff. Don't close accounts. Don't apply for new credit. Don't let TJ Maxx talk you into the 5% off at the cash register, because in the background of every file, there's a team monitoring all credit pulls. So they know if you've applied for anything, and we get the alert. The other thing is large deposits. Anytime we submit a bank statement, underwriters are looking for any large deposits that aren't payroll. So if you've got $10,000 saved at home that's actually cash and you go deposit it, we have no way to prove that. So it can't be used. So there's some things that's the initial conversation we have up front too, of where's the down payment and closing cost money. Other than that, it's, just kind of keep everything the same. Don't change jobs, don't quit your job. I'm not saying if a better job offer comes up, you just can't take it. It's have that conversation with the loan officer first, so they know how to prepare for closing day still.
Yeah, and a big part of that is really the realtor, the lender, title company, insurance. It's a team around you buying that home. And so before making any maneuvers like that or any decisions, talking with us, because we would know more of the kind of maybe ramifications that it would have.
Yeah.
So don't go, what I'm hearing is don't go deposit that lots of money I have under my mattress. We don't deposit that. We don't go and buy a new car right before closing, which maybe happened with me and a buyer. We got through it though. So definitely stay in contact with lender and realtor and the entire team so that we make sure we get you to that finish line.
Yes.
So they're planning to look into the financing of purchasing a home. The first step us realtors always point them to is getting a pre-approval so they know what budget to be looking at. We're not looking at a price point that's out of their reach to where they get excited. So someone contacts you, asks you about what a pre-approval amount could be. What is it you're checking and what is it you're looking at for that?
Yeah, so that first initial phone call is going to be talking about credit and funds for down payment, but it's also going to be, where do you work? How long have you been there? How are you paid? Is it salary, hourly? Are you full-time? Are you commissioned? So we'll go through all of that, and kind of once I have your story and timeline, then I'm going to direct you to the website to fill out the application. Then I'm going to give you a list of, I need 2 recent pay stubs, I need a month of bank statements, your driver's license, your W-2s, your tax returns if you're self-employed. So there's a list of items. So once we have the application, then I can pull credit. So once I have those 2 things and I have your documents, that's when we go in and we calculate debt to income ratios. What's the max sales price you can qualify for? So we start to kind of nail down those details.
Yeah. So then during that conversation about the pre-approval, I'm sure you're looking at because there's various loan options they could go with. So I'm sure you're talking with them about the best loan type that fits their situation. So if you could just go over what are those typical loan types and how does that play out?
Yeah, so there's basically 4 different loan types. There's conventional, VA, FHA, USDA. So there's a range. Each one of those comes with a different credit score requirement and a different down payment requirement. So someone might fit in a box of they qualify for FHA and conventional. And so what I'll do is I'll show them both options, because there's different, when you get into the details of a loan, it's mortgage insurance might be more for conventional, it might be more for FHA. So there's different comparisons, and what we want to do is show them both options and let them make the best informed decision they can.
Yeah, for sure. All right, now for the big question everybody has. Interest rates are a moving target. I know we got used to and spoiled with the 2s and 3s. I think in my lifetime, we'll never see that again. Now we're in about maybe the lower 6s. I know it depends on a lot of different things. So with interest rates kind of always moving around, when someone is thinking about buying and maybe they're a little nervous about where the rates are and what that does to whether it's affordability and such, what would you say to them if they're maybe on the fence and a little nervous about it?
What I always tell all my customers about interest rates is we don't know what's going to happen. We don't know if you're going to lock in and in 6 months rates go down and you're going to wish you would have waited. We just don't know what rates are going to do. So every time the Fed is going to drop the rate, that doesn't always mean mortgage rates are going to drop. So it's not a tick for tick down when the Fed lowers the rate. So I would say for buyers that are nervous, it's go into this with a payment you can afford, that you're comfortable with right now in case rates don't come down and you don't get the chance to refinance later. You never want to be house poor. You want to be happy. You want to be comfortable. So when I show people the rate comparison, if they're looking at, let's just say round numbers, it's 5.5. And they would say, oh, well, I'm going to wait till it gets to 5. When I show them what that is not a huge monthly difference. And they'll go, oh, I'm surprised. Like, okay, let's go ahead and do it. So I like to show everyone those differences too. There's always options to buy down. So it's just a comparison and showing the customers all the options.
For sure, yeah. And what I love is that affordability piece. If the monthly mortgage amount and payment makes sense and it fits your budget. I was talking with somebody the other day, when is the best time to buy real estate? Well, those 5 or 10 years ago, they would have said like, I wish I would have bought 5 or 10 years ago.
Right.
Well, what about now? If we go 5 or 10 years in the future, we might be saying the same thing. So if you can afford it now, the equity can be built over time and the appreciation takes place where it does come down to that affordability piece.
Yes.
And so now talking about the team surrounding the buyer, how does having the right team around them with the lender, realtor, title company, insurance agent, the team they have, how does that make for a smoother process for them?
So my opinion is staying local is always better because you want to be able to, let's say you don't have a scanner. That's a big thing with people. They want to run their documents into the office. Well, we're here. If they want to text me instead of email me because they can't get on email during the workday, that's doable here. So it's local, it's more personable, we're not going anywhere, and same for insurance, staying local. But on the realtor side, you're looking for someone with experience, someone who has dealt in all these different loan types, because it's not just about, oh, you're going to write the contract, you're going to open a door, and you're done. You've had enough experience that you're going to go, had this before on a file, I know what to do, because there's a lot that we try to shield the borrower from. Things that come up that we know aren't a big deal, that we know how to work through together. So I think that's very important when you have two experienced individuals working for the same goal. That's very important for a smooth process.
Yeah. And I do love the local aspect. I oftentimes say with those nationwide lending companies, we'll just use that as an example. I oftentimes say you're a number to them, not a name. But with a local lender, I mean, I'm crossing paths with Allison and other local individuals that, we're crossing paths in the community, and that does make a huge difference. So to kind of close this out, say there's an individual out there that wants to look to purchase a home in the next 6 to 12 months. What is it you would say they should be doing?
So when someone comes to me that wants to buy in that time frame, it's usually credit concerns. They'll go, I just went through a divorce, or I know I was late on this, what can I do? So my advice is always, tell me what you're seeing on your end when you're monitoring those apps for your credit score. Do you want me to pull a credit report? I can, and then I can go ahead and put you in with a credit repair company. And so the credit repair company is good because they can look at it and say, okay, this is old, I'm going to get that removed. Hey, pay this one down. And they'll give us a projected score so that when that 6 months comes and you're ready and I pull that new credit report, we're good to go. There's no concerns about credit.
Oh. And for those maybe that are concerned about, if you pull my credit, it's going to lower my credit, how does that play out and what does that look like?
So when lenders pull mortgage credit reports, they're good for 120 days.
Okay.
So that means from the day I pull, we want to be at the closing table within 100 days to give us some leeway if something happens.
Oh.
What I tell everyone from the day I pull is don't do anything. Keep it the same in case we go over and I have to re-pull again. I should see the same score. Every time your credit's pulled, it's a hard inquiry. Typically drops 3 to 5 points.
Yeah.
So as long as you're not out there during that process and applying and doing all these things, your score should be the same. Heaven forbid we have to pull again.
Right.
So.
Awesome. All right. So that is a basic overview of lending. There's a lot more details that go into it. And so I just want to say thank you, Allison, for your time and the information you provided. And for those that are at the point where they are basically about ready to take the leap into the buying process and they want to get in contact with a lender to get a pre-approval, how do they get in contact with you?
Yeah, so thank you for having me.
Yeah.
This was fun. My cell phone is 325-201-7476. You can call, text me. Most people prefer texting now, so that's absolutely fine. Our website is allamericanmortgagegroup.com. We are located on Antley Road in the Antley West office buildings across from Wiley High School.
Awesome. There you go. So if you have buying a home on your radar if you want it by Christmas, we better get to it. If you want it for 2026, that is the year we're coming up on last I checked. If we want to make that happen for you and you want to make that happen, contact Allison, contact me. We would love to be your team to get you into a brand new home.